Hi, I'm Brian Daingerfield, the co-head of G10 FX Strategy at NatWest Markets, filling in for John Briggs. Retail earnings last week cast some doubt on the strength of the U.S. consumer, and with it weighed heavily on both risk assets and U.S. interest rates. This week, market moves were less stark, but weaker than expected housing data, particularly new home sales, continued to fuel uncertainty about how U.S. consumption will fare in a high inflation and rising interest rate environment. To be sure, these concerns about the impact of inflation on consumption are not new when taking a global perspective. Earlier this year, for example, market participants had already lowered expectations in Europe due to the direct impacts of the war in Ukraine and higher energy costs on consumption. But a widening of these fears in the US could bring with it a catch down in US growth expectations, one which chips away at the US exceptionalism narrative, which has been so critical to the rally in the US dollar. High inflation and concerns about growth that come with it have significant implications on the global political front as well. Just this week, the UK government announced fresh targeted stimulus aimed at supporting consumers under pressure from surging energy prices. In the US, the Biden administration has taken several steps in an attempt to alleviate costs of living pressures, including oil releases from the US Strategic Petroleum Reserve, but inflation has remained high. This week, we released a comprehensive preview of the US midterm elections set to take place on November 8th. Two key factors point toward significant Republican gains in this cycle, and at very least, reclaiming a majority in the US House of Representatives. The first is a historic trend favoring the party out of power in midterm elections. Biden and the Democrats swept into power in 2020, but historical trends show a clear pattern of the winning president losing significant ground in the midterm election 2 years later. Both Obama's Democrats and Trump's Republicans suffered staggering House losses in the midterm following their election in 2010 and 2018 respectively, and the president's party has gained House seats in a midterm election just once since 1942. Intuitively, it follows that motivation and enthusiasm can help explain some of this out-of-power advantage. Turnout tends to be lower in midterm elections versus presidential contests, meaning who shows up to vote can be just as important as who they intend to vote for. Opposition voters who lost the prior election may be extra motivated to vote in lower-profile elections, and recent polling does suggest a Republican advantage in voter enthusiasm. That said, at this point in the race, it's certainly possible that new issues can come up and galvanize voters from both parties before the November election. The second factor favoring Republicans is the current macro landscape, and it's here where inflation and growth come back into the mix. Like market participants, voters are becoming increasingly concerned about the economy, and inflation is consistently polling as the top issue concerning voters. Unfortunately for the president and his party, voters don't seem to be buying that this is Putin's price hike, as recent data suggests voters at least partially blame Biden for runaway inflation. One recent poll out of Quinnipiac University found a staggering 85% of respondents see a recession as either somewhat or highly likely in the coming year. Notably, all of this economic pessimism is occurring against the backdrop of a historically strong labor market, and the Biden administration is simply struggling to deliver a positive economic message on jobs, and his approval rating has fallen to the lowest levels of his first term. The race for the Senate is much closer than the House appears at the moment, but from a market perspective, the Republicans taking just one of the two chambers would be sufficient to lead to legislative gridlock. Like Trump in 2018 and beyond, the opposition retaking the House in 2022 would allow them to effectively grind the president's agenda to a halt. That may push President Biden towards executive action or policy realms like foreign policy and trade, where executive has much greater control relative to Congress. Split government would likely also increase angst over future government funding and debt ceiling debates, and a split Congress could prove slow to respond with fiscal support if some of the fears over growth and inflation facing both voters and market participants are realized. Of course, we're still months away from the November election, and there's plenty to focus on in the near term. In the holiday shortened week ahead, inflation figures in Europe and the US employment report are likely to be the two main data points to watch. On that note, thank you very much for listening. As a reminder to our listeners, we're going to take a break from the Weekly Watch next week, and we will resume in the following week. If you liked this podcast, please be sure to like and subscribe to get more of our NatWest Markets, economics, and market strategy content. Thanks.